Hi everyone, I'm Ross McRae, Group HR Director and Deputy MD at the Ryan Group. Welcome to our presentation series on off-payroll working. This is number 3 in the series, and this presentation will continue a review of the key criteria that are used to determine whether a contract worker is self-employed or not. Our overview of self-employment status tests started in the second presentation in the series. So let's have a quick look at exclusivity, as it's quite straightforward. To be genuinely self-employed, contractors should not be restricted by clients from providing services to other companies. That would be unusual business practice between companies, but it is perfectly appropriate and commonplace to place restrictive covenants in staff terms and conditions. This has been validated by case law, and if the intention is for contract workers to be quite separate from the client, there should be no exclusivity clauses in engagement contracts, either from the end user to the intermediary agent or the agency to the subcontractor. HMRC also look at mutuality of obligations, which is the obligation for an employer to provide work to an employee and the reciprocal agreement for the employee to undertake it. An ongoing obligation to provide work and to do the work should not be an explicit or an implicit term in any contract for subcontractors. Contract workers should be engaged for a specific task or activity rather than be at the general disposal of the engager. Having mutuality of obligation is a clear pointer towards being in scope of IR35, and this is supported by the Carmichael case, where the client was found to be under no obligation to provide work to the contract worker, and this was cited as a determining factor in the court providing an out-of-scope outcome. A lot of people ask about engagement period, but in itself it's not a significant factor other than the likelihood of elements of control or mutuality of obligation materialising over time, along with perhaps increased risk of becoming more part and parcel of the end user company. It may not be good practice from a business perspective just to have one client, but it's not unusual to service a particular client over an extended period. Another important employment check relates to the provision of employee benefits to contract workers. Self-evidently, the provision of any employee benefits will be detrimental to an IR35 assessment. Now, these may include any of the regular staff benefits, such as sickness and holiday pay, or absence being approved, redundancy, pay in lieu, that type of thing. But some less obvious ones include the provision of Christmas parties or other staff events, access to sports facilities such as gyms, subsidised lunches at canteens, which subcontractors might not even know about. There are others that come into this category, including the provision of equipment, which I'll address separately later on. Employment benefits may be one of the more straightforward tests, but there are risks here. Sticking with risk and reward is very important, and we'll spend some time on this subject. The revenue identifier risk is one of the major differentiators between employees and businesses. Employees have very limited risk, and it's expected that companies will carry greater exposure. Risk is of course inherent in contractual relationships, as payment is made after work's been completed. Therefore, there's always a possibility of non-payment or indeed bad debt. It's highly unusual for an employee to carry any significant level of risk, and they also retain a range of statutory protections, such as the requirement to be paid and also to be provided with work. An important factor for the revenue is whether the contract worker is engaged in a project with deliverables and perhaps an end date linked to the completion of that work. Case law in the form of Hall versus Lorimer and McNemanin versus Diggles back this up. In the first case, Lorimer had irregular income through work on a first come first served basis, and in the Diggles case, Diggles was paid a percentage fee based on the client's earnings. Both therefore demonstrated significant risk and were found by the courts to be self-employed. The primary function of running a company is often viewed as developing growth and profit, and on this basis you would expect each company to have a business plan or growth strategy in place, I'm not sure that is, however, always the case. Self-employed persons often carry significant risk, often without realising it, for example, with the cost of materials, stock, labour, project finance, perhaps for plant and machinery. Now, businesses should be able to document their financial risks, but they can't always do that. As I mentioned, there's also risk associated with running a company, particularly in relation to non-payment of chargeable fees, subsequent cash flow problems, professional indemnity, perhaps early completion of a contract or indeed contract termination, lack of opportunities and reduced volume. But many contractors struggle to articulate or demonstrate this risk. Other risk is associated with the provision of services under most agreements, such as the reworking or making good defective services or indeed faulty work, cost of providing replacement contract workers, and of course tax and social security liabilities. The Hall versus Lorimer case I mentioned earlier also indicated that a business-like approach and other personal factors can be taken into account. Now that could include the likes of keeping a company diary or retaining your own office space. Changing how fees are structured can demonstrate risk, and there's lots of commercial options for subcontractors to negotiate. I've documented a few examples on the screen, but there are many more. Fees should relate to service provision and quantifiable measures, for example safety targets or performance service improvements, perhaps key deliverables or milestones, or even early completion performance targets. Something I have seen, which I would challenge, is contractors who have service objectives based on a job description. It's not ideal, as a job description isn't normally used to represent business-to-business relationships. It's usually used to document a staff person's role and responsibilities. So set project work is ideal, as fixed costs can be included in the contract, for example by showing contemplate a fixed sum, even if a contract rate is calculated on a daily or hourly basis. This helps, and it's generally accepted that a contract for services is for a specific project and will end when the project is completed, or indeed earlier if there's a breach of contract, which is another risk, as there should be no disciplinary procedure protection available to contractors. As I mentioned in the first presentation, correctly drafted contracts should resemble commercial agreements and establish that a contractor is in business on their own account. So we've seen how important risk is, but what about the provision of equipment? We said we would have a quick look at that. Courts over the years have ruled that the provision of equipment is one of the indicators of self-employment. Many companies do, however, procure intellectual capability rather than equipment or materials from their suppliers. But regardless of that, responsibility for the provision of equipment should rest with the subcontractor, and in certain instances, such as with the provision of personal protective equipment, it's their legal obligation to ensure that it's made available to their staff. Whilst it's unlikely to be a determined factor of its own accord, and it is very circumstantial, who provides the equipment used by workers is an important consideration. It's also a matter of degree. For example, the planner who provides his own pens will obviously have less of a case in respect of a gardener who has a whole van full of tools. Should a client stipulate that a subcontractor uses their systems to engineer, log, or perhaps manipulate data to precise specifications, then you need to look past the control element. You need to understand what the justification is for this arrangement. So for example, is it economies of scale, compatibility, security, ownership rights, or perhaps licensing restrictions? We've already touched on terms and conditions, and real considerations should be given to contracts. Clearly, if the intention is not to have a relationship of employer-employee with the end user of the contractor services, then contracts should confirm the independence of the parties involved and that there is no relationship of employment. Contracts, like the one that Orion uses, should therefore avoid language or concepts usually found in contracts of employment, such as procedures for notification of absence or reference to misconduct or overtime and stated working hours and breaks. When investigation is in the balance, the revenue may use the intention of the contract to determine IR35 status. This brings to an end our employment status review. Our next presentation in the IR35 series looks at the off-payroll working legislation due in April 2020 and the changes that it will bring. Thank you.